Living below your means is a phrase that is sometimes misunderstood. Simply said, to live below your means, you must limit your spending. Therefore, if your monthly spending is less than or equal to the total of your income from work and other sources, you are living below your means. Living below your means does not prevent you from enjoying life by spending money on the things you love. Instead, you can make some deliberate financial decisions, like saving more money, making a budget, and cutting back on unnecessary purchases. If you want to build a more secure financial future while still enjoying the occasional fancy dinner, it may feel overwhelming to consider the lifestyle changes you might need to make to live below your means. Your credit card debt, vehicle loans, student loans, rent or mortgage, and other debts are still hanging over you, threatening to ruin your plans. The good news is that there are ways to keep your financial goals in sight and still pay your obligations on time. You might even have some money left over to spend on activities you enjoy. Hey guys, welcome to another exciting financial video by Finance Aligned. In today's video, we'll be talking about practical tips to live below your means. But before we continue, kindly like this video, subscribe to the channel, and hit the bell icon to stay notified of more interesting videos just like this one. With that done, let's get right into the video. 8 tips to get you started on living below your means. Number 1. Set up a budget. One of the most important steps you can take to avoid living paycheck to paycheck is to create a budget. You run the risk of falling into an endless cycle of debt if you don't have a clear grasp of your finances and the flow of income and outgoing expenses. Calculate your income and expenses to create a budget. By doing this, you'll be able to determine if you are living below or above your means. Consider your income as well as your other sources of income when calculating how much money you make each month. Child support, gifts, tax returns, money from side jobs, or extra income are a few examples of this. Calculate your monthly spending after that. This includes every transaction you engage in, such as loan payments, credit card payments, insurance, rent or mortgage payments, and payments for food, utilities, and other expenditures. The costs you incur each month could change, so estimate them for 6 to 12 months and average them out. Now's the time to assess if you are living below or above your means. Calculate your monthly revenue by deducting your monthly costs. Great, you're living below your means. If, however, your results were negative, you may be living above your means and need to make some changes to reach financial security. Number 2. Monitor your spending. After you've made a budget, think about keeping track of your spending to make sure you don't run the risk of straying off course. Use a spreadsheet or one of the many budgeting applications for smartphones to keep track of your spending. Making a record of every purchase will force you to reconsider your decisions. By doing this, you can save yourself from buying that $5 cup of coffee when you already have some ready to boil at home. Number 3. Don't depend solely on credit cards. Credit cards are fantastic because they give you the flexibility to spread out the payment of large purchases over the month, even if you don't have the cash on hand. However, 34% of Americans have less than $5,000 in credit card debt, while 14% have between $5,000 and $9,999 in credit card debt. Surprisingly, only 35% of the American population has no credit card debt. These startling figures demonstrate how appealing owning a credit card may be. If you want to avoid the temptation to overspend, use just 1 or 2 credit cards. It's also advised to keep your credit card usage under 30%. This means that if your credit card has a $10,000 limit, for instance, you should only spend $3,000 or less to stay under the advised credit card use percentage. If you do end up using your credit card more frequently, this may indicate to the bank that you may be experiencing financial difficulties, which could have a bad impact on your credit score. Number 4. Reduce pointless expenditures. Americans are big spenders. The Bureau of Labor Statistics revealed in its most recent expenditures report for the year 2017 that they spent over 80% of their annual income. 2017 saw an average pre-tax income of $73,573 and an average annual expenditure of $60,060. These expenses range from $7,729 for meals to $755 for items like cleaning supplies, covering every aspect of American life. Fortunately, you can reduce your spending in some of these areas if you wish to live within your means. Ask yourself, do I really need this? when you keep track of your purchases. You might gain a better understanding of your priorities and what you want to spend your money on if you give each purchase some thought. You might be able to eliminate debt, settle loans, and accumulate savings by spending less than you earn. Here are several areas where you can cut back on pointless spending, depending on your interests. Food and drinks. Pack lunch and make dinner at home instead of going out for lunch and dinner. Going out to eat is 5 times more expensive than cooking at home, according to research done by the food planning website Wellio. Memberships. Change your expensive gym, television, and entertainment subscriptions to a less expensive option. Clothes. Yes, it's nice to be current with fashion, but are the most recent Air Jordans really something you need? By purchasing your clothing at secondhand or resale stores, you can save money. Cars. Why purchase a brand new vehicle when it could lose up to 20% of its value in only 1 year? Purchasing a refurbished one can help you save money while still going where you need to go. Number 5. Start saving early. Transfer funds to your emergency fund, 401k, Roth IRA, or savings account before you are even tempted by your salary. Most banks and workplaces allow regular automated transfers, so when you get paid every 2 weeks or so, money can be distributed to various accounts on an ongoing basis, helping you to limit your spending. Number 6. Rates and bills should be negotiated. Many clients believe that the fees that banks and credit unions charge for their services are unchangeable. Learning how to bargain with credit card issuers, however, can help you save a ton of money because these financial organizations want to maintain you as a client. Ask your credit card provider if you qualify for a long-term repayment plan, a lower annual fee, or a lower interest rate to reduce the cost of your credit card statement. Even telling your credit card provider that you've identified a company with reduced rates on occasion works to get you a better offer. Consider a credit card balance transfer if your credit card issuer is unable to agree to a lower rate for your high-interest credit card. Your financial situation can improve with credit card balance transfers because you can pay off any bills with no interest. Although there may be a minor transfer charge and APR associated with credit card balance transfers, these extra costs are frequently smaller than the interest rate of your current credit card, which could end up saving you more money over time. Number 7. Get a second job for extra income. Finding a second source of income can help you live within your means if that's truly what you want to do. It could be challenging to pick up a second shift without going overboard if you have a normal 9-to-5 job. Fortunately, the gig economy is flourishing, and there are countless opportunities to make money off of your interests and hobbies. Do you enjoy driving? And do you have a great car? There may be openings for new drivers in your neighborhood for Uber, Lyft, or other ride-sharing services. Or have you always wished you could work as a barista? You can make use of your spare Sunday mornings by working as a barista at your neighborhood coffee shop. Here's a bonus option. Number 8. Downsize your home. All kinds of emotions can arise just from the idea of leaving the house you've made your home. However, buying the most pricey home the bank estimates you can afford can make it difficult for you to keep up with insurance, mortgage, and maintenance payments. Instead, you might think about selecting the fixer-upper that's more reasonably priced and only needs a few low-cost home upgrades. The purchasing power of the average American worker's salary today is the same as it was 40 years ago. However, while incomes only increased by 16% during the past 6 years, house prices increased by 47%. Downsizing to a smaller home can be a better choice to improve your finances given the present income to housing price ratio. Even if having a guest dining room sounds lovely, if it's only utilized a few times a year, it can make more sense to sell your house and relocate to a less expensive area. So, with all that being said, it could take some time to adjust to living below your means. Spending less than you earn is one method to achieve financial stability if you're determined to do so. At first, this could seem challenging, especially if you want to stop eating out every night or buying the latest iPhone. With these 8 suggestions, however, you'll be able to get out of debt, make your payments on time, and start saving for your ideal home or even a tropical vacation. That's it for today. What do you think about this video? Kindly let me know what you think about this video in the comments section below. Don't forget to like and subscribe to this video. Also, hit the bell to receive more updates. See you next time. Thanks for watching.